So on that note, our next speaker is Mr. Abdul Warraich, who is a seasoned financial services professional for over 27 years of diverse experience spanning civil service, asset management, public debt management, and financial consulting. He has served in key leadership roles at the Federal Board of Revenue, NBP Fund Management, UBL Fund Managers, and the Government of Punjab and Pakistan. His professional journey not only includes collaborations within Pakistan, but also global institutions such as the World Bank, IFC, ADB, and the Oxford Policy Management. A CFA charter holder and an FRM certified professional, Mr. Warraich brings deep expertise in public finance and governance. He's already here. I was wondering what's left. So a huge round of applause to Mr. Abdul Warraich. He will share the presentation on capital reforms in Pakistan. Over to you, sir.
Thank you very much for the very generous and a bit exaggerated introduction. How do I move? Honorable participants, professionals from all parts of the financial sector, representatives from the securities regulators, capital market institutions, including the exchanges, the clearing companies, the depository companies, and the key private sector institutions, including banks, insurance companies, asset management companies, brokerage companies, and analysts. A very warm welcome to all of you, and thank you so much for participating. And a special thanks to our international delegates, the Chinese delegation led by our friend Yu Hang, who has an English name also, Mr. Harry Yu, who is a director on the Pakistan Stock Exchange and serves as a senior executive in the Chinese Futures Exchange. Thank you very much for bringing and leading the Chinese delegation. The delegation from Bangladesh is very special for us, led by their commissioner, Mr. Saifuddin. So heartfelt gratitude and thanks to them. Iran is represented by Mr. Ghulam Raza, who heads the Sharia Committee of their Securities and Exchange Organization. Many thanks to you, sir. The Azerbaijani delegation, full of young, handsome, and energetic individuals from the entire financial sector of Azerbaijan, is very, very special. So many thanks to them. And finally, our friend James Angel, who is perhaps one of the best-known experts on securities exchanges and their different dimensions in terms of their development levels and their efficiency levels. He is one of the best-known experts on the subject. So many thanks for traveling all over from USA to here and participating. Ladies and gentlemen, many good things have happened in the capital markets of Pakistan, but I will try to focus on only 3 of them, just to keep the discussion focused. And I'm sure there are other discussions, the panel discussions, which are planned and centered around these initiatives. But these are somewhat unique in our opinion. Pakistan has taken Pakistani capital markets and regulators and institutions have taken a few leaps of faith. So I would like to highlight these initiatives to you. I hope that the foreign delegates would also be interested in them. They would study them, they would analyze them, and hopefully try to emulate them in their own countries. And if any of the foreign delegates feel that they are already doing these things and perhaps they are ahead of us, then we will really like to listen to them and to learn from them and to further refine these initiatives. So the first one is the trading of sovereign government debt securities on organized securities exchanges. In most of the countries around the world, these securities are issued and traded in over-the-counter market. We believe that issuance and trading of these securities on organized exchanges brings a number of benefits. But first of all, I would just quickly recap the three major institutions which make it possible in the capital markets. The first one is the Securities Exchange, where the debt issuers, including the government, can come and raise their debt through primary issuances or public auctions, so to say. The secondary market trading also happens entirely on the stock exchange. If there are any large-sized off-market transactions, they must be reported to the exchange and they must follow the same process for clearing and settlement. The second key institution is, of course, the clearing company, which processes all the payments. It receives money from the buyers, hands it over to the sellers, and makes sure that the securities are transferred from the seller to the buyer. So they play an important role in documenting all the payments and computation and collection of certain relevant taxes also. And finally, the central depository, which maintains the ownership records, which serves as a registry and maintains the records of which securities were issued when, and when did they mature, and over their lifetime, who were the investors that owned and held those securities. So together, these three institutions constitute a standardized process for trading in securities. In most of the countries around the world, equity securities it is very common and normal for the equity securities to be traded on the organized securities exchanges. Pakistan, we believe, is one of the few countries which have taken the lead to encourage and foster and nurture the trading of debt securities on organized exchanges. And perhaps one of the very few countries where sovereign debt securities have also now begun to be issued and traded on organized exchanges. So just to quickly highlight a few key benefits of issuance and trading of debt securities, particularly the government debt securities on organized exchanges. It brings transparency. Regardless of whether it's a primary issuance or a secondary trade, regardless of who is buying or who is selling, every trade has to flow through and be executed in the same way. The process is completely standardized. The information is available to the entire world. Anybody, whether it's an analyst or a foreign investor or public or a government decision maker, they can go to the website of the stock exchange and find out which securities were traded at what prices, on what dates, and at what volumes. It brings competition among all players. The investors are competing to purchase those securities. The issuers are competing among themselves to sell more securities. And then, of course, there are all kinds of service providers, the brokers and the asset managers and the bankers and the insurance companies, which are advising their clients and which are also participating in them, which are either educating their clients regarding the valuation of their securities or actively advising them to buy or sell. So they are facilitating all of these transactions. And then there is efficiency. When you have transparency, when you have more competition in your securities markets, the inevitable result is efficiency. Efficiency in price discovery. When there are many issuers and many buyers who are competing for those securities, the prices that you are going to get are highly likely to be very credible and reliable. And then, of course, there are time and cost savings because the processes are standardized, because there are electronic platforms available to trade and to make and receive payments and to transfer and hold the securities. And of course, there is tax efficiency also. When every payment flows through a single institution, it becomes very easy and convenient to compute the gains or losses which have been incurred by various investors and collect all the taxes which apply to those transactions or to those gains at one point. And finally, the risk management. When trades don't have to be settled bilaterally between the buyer and the seller, when there is a central counterparty in the form of a clearing company which assures payment to the seller and assures delivery to the buyer of whatever they are buying, then you de-risk those transactions. Then you encourage more and more investors and traders to start participating. So just to give you a quick snapshot, after the landmark decision by the Ministry of Finance and the federal government of Pakistan to allow the capital market institutions to assist the Ministry of Finance in raising debt on Pakistan Stock Exchange. This happened back in December 2023, so it has been almost 2 years. So just to give you a quick snapshot, so far over the last 2 years, all of the Sharia-compliant tradable debt raised by the government of Pakistan has been raised on the stock exchange. The government of Pakistan has been issuing 8 different unique securities, unique in terms of their features. And for a quick recap, the government is offering a one-year maturity sukuk, which does not pay any coupons on maturity. You have to buy or sell it at a discount to face value. The 3, 5, and 10-year sukuks come in 2 forms. There are fixed rate paying sukuks, which pay a fixed profit rate, and there are variable rate profit paying sukuks. And the 8th instrument is a 10-year sukuk, which does not pay any separate profits over its lifetime. It only pays a lump sum amount. You can call it face value, and you have to buy or sell it at a discount. So 8 securities, which come in 4 different tenors, and both fixed and floating type of profit rates, and some with regular coupons and others don't. The primary auctions are held fortnightly, and the secondary market trading takes place 5 days a week during office hours. The total debt that the government has raised since December 2023 till to date is a little more than $13 billion US. And the secondary market traded value over the same period is close to $3.4 billion US. So you can already sense that the market is gaining in size and becoming more and more attractive to more and more local and international investors and traders. The second unique initiative that has taken place in Pakistan in recent years is the adoption of SEC-regulated contributory pension system by the governments. We have 4 provincial governments and a federal government. These 5 governments are already on board, and these governments have decided to move away from the traditional pension schemes where everything was done by the governments in-house. And over time, the cost of these schemes, the fiscal cost, had become very high and unsustainable. So now the governments have decided for their future employees to follow more financial discipline, to work in partnership with the private sector, and to switch towards contributory pension system, a very transparent one which is regulated by an independent regulator in the form of SEC. So if I talk about global trends, I think most of you would agree that defined benefit schemes have proven difficult to manage all over the world. Private sector, which is supposed to be more efficient than the public sector, realized that many years ago. There are hardly any large or small private sector companies or businesses which pay defined benefit pension schemes, which currently have defined benefit pension schemes for their employees. They realized many years ago that this cannot be done, the entire scheme cannot be run by the employers themselves. This has to be done in partnership with the private sector. So the private sector switched from defined benefit to defined contribution many, many years ago. The governments have been slow to adapt, but there are many countries, and thankfully the Pakistani governments in Pakistan also, which have decided to now switch to the contributory schemes. What are the key features of these schemes that make them attractive? One is the savings and investment focus. Because of the financial discipline they bring, every month you have to contribute a certain amount into a pension account, which has to be invested in some tradable investment or security. So that builds a huge pool of savings and investments over time. Then another benefit which is absent in the traditional government-run pension schemes is portability. Typically, if you're working for the government and you're part of the traditional pension scheme, you have to work for at least 20 or 25 years before you even become eligible for the pension benefits if you leave service. But the contributory schemes are inherently portable. All the contributions go into your personal pension accounts, they are invested, they accumulate the profits, and if and when you leave service, regardless of any minimum tenure, whenever you leave service, the balance in your pension account is your property. It goes with you. So you don't have to serve the employer for a minimum number of years, whether 10 or 20 or 25, in order to become eligible or entitled for the pension benefit. The next is transparency. When there are multiple private sector stakeholders working with the employer, then things become very, very transparent. The pension fund managers offer you online accounts where you can see how your pension account and the investments that are being made, how well are they doing. There are independent auditors and independent custodians and trustees who are watching the pension fund managers. There are insurance companies which are designing the post-retirement products for you. They have a stake in making them successful, and all of them strive with the help of rating agencies and consultants and analysts to educate the public and to educate the employers how to run these schemes on a more sustainable and in a more efficient basis. So there is a high level of transparency. It's very easy for an employee to simply log into their pension account and see how well their pension savings are building up. They can voluntarily start adding to their savings. They can have access to the auditor's reports, to the trustees' reports, to develop that comfort that their money is in safe hands. So the essence of this scheme is that the government should not try to go it alone. The government has to partner with all the other stakeholders. The employees become a stakeholder in the scheme. The regulators like SEC become a key stakeholder in the success of the scheme. And most importantly, all the private sector service providers, the banks and the insurance companies and the fund managers and the brokers and the custodians and the exchanges and the clearing companies, everybody becomes a stakeholder in that scheme. Everybody is striving now for its success and sustainability. So that is the best part of this scheme, that it brings everyone together. And in that process, the government's fiscal problems are addressed. In that process, the economy grows, the jobs are created, high-skilled sectors in the financial industry develop. So there are unlimited benefits to this collaboration. I'll give you a quick snapshot of the contributory pension system industry as it stood at the end of June of 2025. In Pakistan, the financial year starts in July and ends in June, so most of our measures are as of the end of the June of the most recent year. There were 19 independent pension fund managers in the private sector, which were staffed by qualified individuals and which were registered with the SEC of Pakistan. There were 47 different pension funds that were offered by these 19 pension fund managers. As many as 110,000 individuals have opened pension accounts in the contributory pension scheme. A few thousand of these belong to the government, but there are many others who have voluntarily opened their accounts. So this scheme can be opted voluntarily by an individual to build savings for their retirement, and these can be mandated by the employers, and they can make it mandatory for their employees to become part of these schemes. And finally, the total assets under management, the number may not seem huge. It is close to 400 million US dollars at the end of June, but I tell you, now that the governments are adopting these schemes and the private sector is also becoming more aware of their benefits, we expect a very high growth rate going forward, maybe in between 30 to 40% a year. So you can expect these assets to be doubling every 2 or 3 years for maybe the next 10 or 15 years. So you're going to hopefully witness a very high growth in the contributory pension system, which is regulated by SEC. And finally, just to give you a snapshot of asset allocation, the asset allocation is decided by the beneficiary. The pensioner or the account holder decides where the money will be invested. The broad asset allocation, whether in equity or in fixed income, the two broad asset allocation categories. And it's very interesting to see that naturally, on average, the individuals have chosen a 30% equity allocation and a 70% fixed income allocation, which is considered widely by most analysts and experts to be a very highly optimal allocation for long-term savings and investments. Nobody dictated these ratios. The individuals have decided on their own. Many individuals may have a higher allocation and many may have less. But on average, you can see that when you engage public and you let them take charge of their decisions and make their own decisions, the average decisions made by the public are usually quite prudent, because many of them are seeking advice from experts and consultants. And as I said, there are so many stakeholders and there is so much information that gradually becomes available to them that even if they make suboptimal decisions, they are highly likely to rectify them. Because of the information they are getting, they are going to learn and they are going to improve their investment decisions. It's difficult to exaggerate the benefits of this scheme. The risk management is high. Now the entire risk is not on the employer. There are a number of stakeholders who are coming together and who are sharing the risks and who are trying and striving to make the scheme successful. The expenses go down because when there is competition among the service providers and among the investors and among the employers, you should expect the costs of such schemes to come down. The efficiency would be highest because the specialists are doing their jobs. The investments are managed by fund managers. The guarantees are designed and offered by the insurance companies. The custody is maintained by the custodian or the trustee. The audit is done by the private sector experts in the audit industry. There are rating agencies and there are analysts. So all of this competition ensures efficiency and lower costs. And the overall economic financial gains, as I already said, you should expect the economy to grow faster. You should expect the capital markets to develop faster. You should expect the scheme to become more financially sustainable for the employers. And you should expect the employment and the skills in the country to grow faster. And finally, one or two slides about the modernization of agricultural markets. SECP has for a long time been striving to convince the federal and the provincial governments to modernize the agricultural markets. We believe that there are three key pillars to a modernization of agriculture strategy. The first one is that the country needs accredited storage facilities for all types of agricultural produce. Maybe we can start with grains, which have a longer shelf life, and where the storage facilities are cost less. but eventually we can move on to the other agricultural produce also. These accredited warehouses should be able to issue electronic warehouse receipts, which should be bankable, which means the banks should readily accept them as collateral and provide financing to the owners or depositors of these commodities. And these EWRs should also be tradable on an organized exchange like Pakistan Commodity Exchange. The second major pillar is that the trading markets need to be modernized. The trading of these agricultural markets should take place not in small, fragmented markets, which currently exist in many countries, including ours. Most of this trading should take place on organized, modern exchanges like the stock exchange or the mercantile exchange. But more importantly, agricultural markets are tricky. Typically, the local governments and the state governments have a lot of say in the way agricultural markets are regulated. So there has to be a lot of collaboration between the national regulator and the national government and the various state governments and the various ministries in different provinces and states in your country. A key success that has been achieved in recent months is that the government of Punjab is the largest province in Pakistan by population and by its share in GDP, devised a program to promote accredited storage facilities and organized trading of agricultural commodities on organized exchanges. The government announced a program targeting between 500,000 to 1 million ton of wheat grains in accredited facilities. The government engaged a few banks as the partners who would give loans up to 70% of the value of the commodity within a day of depositing that commodity in the warehouse. The government also announced a subsidy to pick up the rental of the warehouse and also the markup that is payable in case the depositor opts for bank financing for up to a maximum of 4 months. So I'm glad to tell you that the state governments in Pakistan are now becoming more aware, becoming more cognizant, and becoming more responsive to this challenge that we have in front of us. And we believe that a lot of good things will happen in future. And every stakeholder is expected to gain. The farmers will have more options. They won't have to sell at the time of harvest at whatever price is available. They can always store a part of their commodity to sell it later when prices are better. The traders will have similar options. The processors will not have to stock their own warehouses when high-quality commodity stocks will be available in accredited warehouses around the country. The working capital requirements of the processors and food-related businesses will go down. The banks will welcome this development. The electronic warehouse receipts are considered to be highly bankable instruments around the world. The capital market institutions will develop. The mercantile exchange and the clearing company and the warehouses will provide all the services that are needed for storage and trading of these commodities. And of course, you will need more regulators, probably at the state levels, who work more systematically, who can work in close collaboration with the national regulators like SECP. I think I'm running out of time, so thank you very much for your patience. I hope there will be many more discussions on these topics. I would request you to be more proactive, to engage more intensely so that all of us can learn as much as we can from one another. Thank you very much for your patience and your attention.